Imagine a world where every piece of high-end technology, every solar panel soaking up the sun, and every artificial intelligence supercomputer humming in a cold room depends on a single, finite element that is quietly vanishing from the Earth's crust. We are standing at a precipice where silver is no longer just a metal for jewelry or a hedge against inflation. It has become the most critical strategic asset of the 21st century. While the world stares at the price of gold, a far more explosive story is unfolding in the silver markets, a story of a silver bomb that is primed to detonate. The massive disconnect between the physical reality of silver mining and the insatiable hunger of the digital revolution has created what experts call an infinite demand loop. This isn't just a minor market fluctuation. It is a structural deficit of over 100 million ounces that is growing every single year. When the world's most powerful industries realize that the cupboard is bare, the resultant price explosion won't just be a rally, it will be a total re-rating of value that could send silver prices soaring by 500% or more. We are witnessing the birth of a supply-demand vacuum that has no historical precedent. And today, we are going to peel back the layers of how AI and the green energy transition are cornering the silver market into a corner from which there is no escape. For decades, silver has been treated like the poor man's gold, a secondary asset that follows its yellow cousin's lead. But that era is officially over, because gold doesn't run the world's technology, silver does. Silver is the ultimate conductor of electricity. It is the most reflective metal on the periodic table, and it possesses thermal properties that no other element can match. These aren't just cool science facts. They are the bedrock of the modern world. As we pivot away from fossil fuels and toward a future powered by the sun and managed by algorithms, we are placing a burden on silver that the mining industry was never designed to handle. The infinite demand loop refers to the fact that, as our technology becomes more advanced, our reliance on silver doesn't decrease, it intensifies. We are moving into a phase of human history where silver is the oxygen for the digital age. Yet the world is acting as if the supply is endless. The reality is that we are depleting our above-ground stocks at an alarming rate, and the 100 million ounce deficit we see today is likely just the tip of the iceberg. The first major driver of this collapse in supply is the global obsession with solar energy. We are told that the future is green, but no one mentions that green energy is paved with silver. Every single photovoltaic cell in a solar panel requires silver paste to conduct the electricity generated by the sun. In recent years, the solar industry has undergone a massive technological shift to N-type cells, which offer higher efficiency but require significantly more silver per unit than older models. While engineers try to find ways to use less silver, a process called thrifting, the sheer volume of solar installations is far outstripping any savings. In fact, some projections suggest that by 2050, the solar industry alone could consume nearly 90% of the world's current known silver reserves. We are building a global energy infrastructure on a foundation of a metal that is becoming increasingly rare. This creates a terrifying feedback loop. As the climate crisis intensifies, the rush for solar speeds up, which in turn accelerates the depletion of silver, making the transition even more expensive and difficult. But as massive as the solar demand is, the real black swan event for silver is the explosion of artificial intelligence. AI is not just software. It is a physical beast that lives in massive data centers filled with high-performance chips and intricate cooling systems. These chips, particularly the GPU clusters that power AI training, require silver for their internal connections and power delivery systems, because any loss of conductivity results in heat and inefficiency. In the world of AI, speed and heat management are everything. Silver's unique ability to handle high electrical loads with minimal resistance makes it indispensable. As companies like NVIDIA, Microsoft, and Google build out the brains of the future, they are inadvertently creating a massive new sink for silver. This demand is inelastic, meaning these companies will pay almost any price to get the silver they need, because the cost of the metal is a tiny fraction of the multi-billion-dollar AI projects they are building. When the tech giants start competing with the energy giants for the same dwindling ounces of physical silver, the price will no longer be determined by traders on a screen, but by the desperate needs of the most powerful corporations on Earth. The most misunderstood part of this equation is the supply side. Many investors assume that if the price of silver goes up, miners will simply dig more out of the ground. This is a dangerous myth. Roughly 70% of silver is produced as a byproduct of mining for other metals, like copper, lead, and zinc. This means that silver miners can't just flip a switch and increase production because the silver they find is often just a bonus in a much larger operation. To build a new primary silver mine from scratch takes anywhere from 10 to 15 years, involving permits, exploration, and massive capital investment. We are currently seeing a decline in ore grades, meaning miners have to dig through more rock to find less silver. While demand is moving at the speed of a digital algorithm, supply is moving at the speed of a shovel. This creates a supply wall that is impossible to climb. The vaults at the COMEX and the London Metal Exchange are already being drained to fill the gap between what is mined and what is consumed. We are living off the savings account of silver that was accumulated over the last century, and that account is rapidly hitting zero. While the physical fundamentals are screaming for a price surge, the traditional financial markets have been distracted. For years, large bullion banks like JPMorgan have been accused of managing the price of silver through paper market selling massive amounts of silver that doesn't actually exist in physical form to keep the price suppressed. However, manipulation can only work as long as there is enough physical metal to satisfy the people who actually want delivery. We are now reaching a breaking point where the paper-to-physical ratio is becoming unsustainable. If even a small percentage of paper-silver investors demanded their physical metal at the same time the solar and AI industries were buying, the market would face a catastrophic short squeeze. This is the silver bomb. When the banks realize they can no longer suppress the price because the physical vaults are empty, they won't just stop manipulating, they will flip their positions and go long, riding the wave they spent years trying to hold back. This transition will be violent, fast, and will leave anyone holding paper assets wondering where their wealth went. The 100 million ounce deficit is not a temporary glitch. It is the new normal. We have entered a period of structural scarcity. In the past, silver price spikes were often driven by investment demand or fear, and when the fear subsided, the price fell. But this time is different. This is industrial demand. A solar panel company doesn't care about the Federal Reserve's interest rates. They need silver to stay in business. An AI chip manufacturer doesn't care about a strong dollar. They need silver to keep their servers running. This transition from silver being a monetary metal to a critical industrial commodity is the key to the 500% price explosion. We are moving toward a world where silver will be hoarded by nations as a strategic reserve, much like oil or uranium. The era of cheap silver is ending because the world has finally found a use for it that is more valuable than money itself. We are consuming the very foundations of the digital age, and the market is only just beginning to wake up to the consequences. As we look toward the end of this decade, the silver bomb represents more than just a trade. It represents the ultimate wealth transfer. The bridge between the old world of fiat currency and the new world of high-tech energy is built of silver. Those who recognize the infinite demand loop today are looking at a landscape where the upside is not just limited to a few percentage points, but to a total revaluation of what this metal is worth to human civilization. The 100 million ounce deficit is a countdown timer. Every solar farm built, every AI model trained, and every ounce drained from the vaults brings us closer to the moment of impact. Silver's the hidden link in the chain of human progress, and when that link becomes the rarest commodity on the planet, the world will finally realize that silver was unjust gold's little brother. It was the engine of the future all along. The question isn't whether silver will explode, but rather, who will be left holding the physical metal when the rest of the world realizes it's gone.